Let's talk about Warren Buffett, the Oracle of Omaha, billionaire grandpa, and finance legend. Everyone knows his name, but most of what you hear is just myth. His story is more complex, more human, and way more relatable than you think. In this video, we'll pull back the curtain, bust the biggest myths, and break down Buffett's real strategies you can use today. Get ready, we're diving into the real secrets behind Buffett's success. Warren Buffett didn't set out to build an empire with Berkshire Hathaway. He bought the struggling textile mill out of frustration, not vision, after a petty dispute over a few cents per share. The business was a money pit, and Buffett later called it his $200 billion mistake. But he adapted, using the company's cash flow to buy better businesses. Sometimes the greatest successes are born from accidental beginnings. Many think Warren Buffett is just a stock market guy, but that's a myth. Berkshire Hathaway owns entire companies like Geico and Dairy Queen, not just stocks. Buffett also holds billions in cash and U.S. Treasury bills. The real lesson? Think like a business owner, not just a stock picker. Opportunities for wealth go far beyond the stock market. Let's talk about a big myth, that Warren Buffett is an emotionless investing machine. Even he can make emotional decisions. In early 2020, Buffett sold all of Berkshire's airline stocks during the COVID-19 panic, right near the bottom. Those stocks rebounded soon after. Even the best investors aren't perfect. Buffett's move reminds us, stick to your principles, especially when emotions run high. Let's smash the like button for the YouTube algorithm, and bust the myth that Warren Buffett is a miser. Yes, he lives in the same house since 1958 and drives a modest car, but it's not about denying pleasure. Buffett spends on what brings him value, not on flashy things. He avoids debt, invests in himself, and enjoys life once his finances are secure. The real lesson? Spend intentionally on what matters to you. For decades, Warren Buffett famously avoided tech stocks, sticking to businesses he deeply understood, like Coca-Cola and insurance. But in 2016, everything changed. Berkshire Hathaway began buying Apple, making it their largest holding. Buffett realized Apple wasn't just tech, it was a powerful consumer brand with loyal customers. His principles stayed the same, but his circle of competence grew, a lesson for every investor. People say cash is king, but that's not the whole story. Warren Buffett actually calls cash one of the worst long-term investments. Why? Because inflation eats away at its value every year. Buffett holds cash not for safety, but as dry powder, ready to seize opportunities when others panic. For most of us, keep an emergency fund, but don't let cash just sit. Make your money work for you. Warren Buffett's first rule for building wealth? Never depend on a single paycheck. Relying on one income is risky. If it disappears, so does your financial security. Instead, build multiple streams of income. Start small, a side hustle, rental property, or investing. Each new stream is a layer of financial armor, giving you freedom and resilience, just like Buffett. Alright, so you're building multiple income streams, that's fantastic, but what's the next step? How do you know where to put your money? How do you tell a great investment from a terrible one? This brings us to Buffett's second core principle, and it's one that most people try to skip because it sounds boring, but I promise you it's the secret key to the entire kingdom. Buffett says you have to learn accounting. He calls it the language of business, and he's absolutely right. Trying to invest without understanding basic accounting is like trying to play a game of poker without knowing what the cards mean. You're just gambling and the house is probably going to win. Think about it this way, when you buy a stock, you're not just buying a ticker symbol that goes up and down on a screen. You are buying a small piece of an actual, living, breathing business. That business has revenues, expenses, assets, and liabilities. And all of that information, the entire story of how that business makes money and whether it's healthy or sick, is told through its financial statements, the income statement, the balance sheet, and the cash flow statement. If you can't read those, you're flying blind. You're relying on headlines, YouTube comments, and a good feeling to make decisions, which is a recipe for disaster. You don't need to become a certified public accountant or a CPA to do this. You don't need to spend years in school. Buffett himself says you just need to understand the basics well enough to know what you're looking at. There are tons of resources online, free courses on YouTube, websites like Investopedia, and books that break it all down in simple terms. Learning to read a balance sheet is a skill that will pay you dividends for the rest of your life. It allows you to cut through the hype and make your own informed judgments about a company's true value and long-term prospects. It's the difference between being a speculator and being an investor. Once you have a grasp of the numbers, you can start to understand different business models. Why does a company like Costco operate on razor-thin margins while a software company like Microsoft has massive profit margins? How can a company show a huge net income but have negative cash flow? These are the kinds of questions that accounting helps you answer. It allows you to see the mechanics of a business, to understand its competitive advantages, and to identify potential red flags that other people might miss. Mastering this language is your superpower. It's what separates the amateurs from the pros and gives you the confidence to invest for the long term. Warren Buffett understood the power of compound interest from a young age. Einstein called it the eighth wonder of the world. It's your money making money, and then that money making more money, a snowball effect. Buffett started investing at 11, giving his money decades to grow. The real secret isn't picking the perfect stock but starting early and letting time work for you. It really is that simple. Early in his career, Warren Buffett followed Benjamin Graham's cigar butt investing, buying cheap, struggling companies for a quick gain. This led him to buy Berkshire Hathaway, a failing textile mill. But with Charlie Munger's influence, Buffett shifted to buying wonderful businesses with durable competitive advantages, a moat. Think Coca-Cola or Apple. Brands competitors can't easily replicate. That's the difference between picking up scraps and owning the whole castle. Warren Buffett says the most important quality for an investor is temperament, not intellect. It's about controlling your emotions, fear and greed, so you don't buy high and sell low. The stock market rewards patience, not panic. Focus on the business, not the daily headlines. If you can master your own psychology and stay calm when others panic, you'll have a bigger advantage than any stock tip. It's about your stomach, not your brain. The key to building lasting wealth: focus on value, not just price. As Warren Buffett says, price is what you pay, value is what you get. A cheap car or product may seem like a deal, but long-term costs add up. Ask, what's the total cost over years, not just today? Invest in quality and durability. This mindset shift will transform your financial future. Okay, now for step number 7, and this is where we get into the nitty-gritty of your daily spending habits. Warren Buffett is a master at accumulating wealth, but he's also a master at not losing it to pointless expenses. This step is all about avoiding those common wealth-destroying purchases that slowly drain your bank account without you even realizing it. Let's be honest, we've all been guilty of this at some point. It's the little leaks in your financial boat that can eventually sink the entire ship if you don't plug them. And one of the biggest offenders, according to Buffett, is buying a brand new car. It's one of the fastest ways to light your money on fire. The reality is, the moment you drive a new car off the lot, it loses a significant chunk of its value. We're talking about 20% or more in the very first year. That is an insane amount of money to lose for literally no reason other than the temporary thrill of that new car smell. Buffett himself famously drives his cars for years and years, only replacing them when they're no longer practical. He buys slightly used cars, letting someone else take that massive initial depreciation hit. This isn't about being cheap, it's about being smart. Why would you willingly throw away thousands of dollars on an asset that is guaranteed to go down in value? It just doesn't make any financial sense. But it's not just about big purchases like cars. The same logic applies to the smaller, recurring expenses that add up over time. I'm talking about those unused gym memberships you forgot to cancel, the 5 different streaming services when you only watch 2, or the daily gourmet coffee that costs you over $1,000 a year. Buffett would call these financial termites slowly eating away at the foundation of your wealth. Each individual charge seems small and insignificant, but when you add them all up, the total amount is often shocking. This is money that could be invested in working for you, compounding into a substantial sum over the years. So the action item here is to conduct a ruthless audit of your expenses. Seriously, go through your last 3 months of bank and credit card statements with a fine-tooth comb. Highlight every single subscription, every recurring payment, and every non-essential purchase. Then ask yourself a simple question for each one. Is this providing me with value that is greater than its cost? If the answer is no, cut it. Be merciless. This isn't about depriving yourself of joy. It's about being intentional with your money. By plugging these financial leaks, you free up a surprising amount of cash that you can redirect towards your investments, accelerating your journey to financial freedom. Every investor makes mistakes, even Warren Buffett. He's lost billions, missed out on Google and Amazon, and admits his errors openly. The real lesson? Learn from your own mistakes and from the costly ones of others. Keep an investment journal, analyze what went wrong, and don't repeat the same errors. In investing, perfection isn't the goal, growth is. Warren Buffett's most underrated investment isn't stocks or real estate, it's people. He said, "It's better to hang out with people better than you. Your social circle is an asset. Surround yourself with ambitious, positive people, and their habits will rub off on you." That's ambient learning. Buffett's partnership with Charlie Munger changed his entire approach and made Berkshire Hathaway what it is today. Audit your circle. Seek out those who lift you up. Your network is your net worth, in every way. Warren Buffett says, take a job you love. It's not about quitting everything for a risky dream, but about finding work that excites you, so it doesn't feel like work. When you love what you do, you excel, and opportunities follow. Use your current job as a launchpad. Gradually steer your life toward what you're good at, what you love, and what pays. That's the real key to long-term success. So, after debunking the myths and laying out the real strategies, what is the ultimate secret to Warren Buffett's success? The truth is, it's not a secret at all. It's a blueprint that's been hiding in plain sight for decades, accessible to absolutely anyone willing to apply it. It boils down to a simple, almost boring formula: consistently spend less than you earn, invest the difference wisely in things you understand, and then repeat that process with unwavering patience for a very, very long time. That's it. There are no exotic financial products, no high-risk gambles, and no secret handshakes. It's about discipline, not genius. It's about temperament, not timing the market. Anyone can do this. The power of this approach lies in its simplicity and its reliance on universal principles. You don't need a seven-figure income to start, you just need to create a gap, however small, between what comes in and what goes out. That gap is your seed capital. From there, every dollar you save isn't just a dollar, it's a little employee you're sending out into the world to work for you. By investing in wonderful businesses, productive assets, or even just a low-cost index fund, you're putting that money to work. The goal is to shift your mindset from seeing money for its face value, what it can buy you today, to seeing it for its potential value, what it can grow into tomorrow. This journey isn't about getting rich quick, it's about getting wealthy for sure. It's about building a financial foundation so strong that you can weather any storm, take advantage of opportunities when they arise, and ultimately buy back your time so you can spend your life doing what you truly love. It's about building a life where money serves you, not the other way around. Buffett's story isn't just about becoming a billionaire, it's a testament to the incredible power of rational thinking, emotional control, and the relentless compounding of good habits over a lifetime. It's a roadmap that proves that small, consistent actions can lead to extraordinary, life-changing results. So the next time you get a paycheck or consider a purchase or think about your future, remember this blueprint. Audit your expenses, automate your savings, and invest in your knowledge and your future self. Start early, stay consistent, and let the magic of compounding do the heavy lifting for you. The principles that built the Berkshire Hathaway empire are the very same principles that can build your own personal fortune. $1 and one smart decision at a time. The path is clear. The only question left is whether you're willing to walk it. Thank you so much for watching, and I'll see you in the next video.